Today I will be sharing my top 5 favorite ETFs, and these will definitely help you to reach your financial goals. In these times when every single financial YouTuber is posting videos about the next recession, we as investors need to be wise and look for defensive alternative approaches to investing. And one of the best ways of doing that is through passive ETF investing, where you can basically just let go of the wheel and let the markets do its thing while you gain solid returns. This approach will allow you to get into the markets immediately without you having to worry about all of your individual investments. So that means you don't have to research the companies anymore. You don't have to read annual reports anymore. So this is truly the key to passive income. And one of the best things about ETF investing is that the fees are extremely low. So you don't have to worry about the fees eating away your profit over the long term. You can basically put all of your capital gains and the dividends you receive straight into your pocket. So if you guys do enjoy today's video, then be sure to smash the like button and subscribe to my channel if you haven't already done so. So with that being said, then let's jump to my top 5 Vanguard ETFs for passive investing. Okay guys, so the first ETF that I would highly recommend is the Vanguard Real Estate ETF, ticker symbol VNQ. As we all know from the investing godfather Graham Stephan, then can real estate be a really lucrative investment when done right. So this ETF tracks the performance of the MSCI US Investable Market Real Estate 25/50 index, which essentially just means that this ETF is tracking a bunch of so-called real estate investment trusts or REITs and other real estate holding companies, ranging from large cap, mid cap and small cap companies, providing a very diversified mix. There is actually 167 different companies within this real estate ETF. When looking at the top holdings, then we find companies like American Tower Corp and Royalty Income Corp that both have performed very well over the last couple of years. And if you think that this might be an indication that this ETF is also performing well, then you are correct. Over the last 5 years, this ETF has given a return of 12%, and it is consistently beating the real estate market. At the same time, this ETF provides investors with a dividend yield of almost 4%, which is very, very high. And it has a low yearly expense of only 0.12%. So if you are looking to get exposure to the real estate market, get high capital gains and extremely high dividend payments, then I would definitely recommend you to look more into this ETF. The next ETF is a staple in my portfolio, and it is the Vanguard S&P 500 ETF, ticker symbol VOO. This ETF is tracking the most important index in the entire world, and that is the S&P 500 index. So this is definitely an ETF that I would highly recommend you to look more into. It includes some of the most popular brands in the world, like Microsoft, Apple, JP Morgan, Amazon, just to name a few. Now, obviously what we care the most about as investors is the returns. So let's get into it. This index has over the last 5 years provided investors with a return of 41%, and over the last 10 years, a return of 169%. On average, then is the Vanguard S&P 500 ETF providing investors with a return of roughly 9%. However, this ETF is also paying dividends. And last year it had a dividend yield of 1.69%. Obviously, then this is not the highest paying dividend ETF, but when you're combining the dividend with the return it provides, then you suddenly understand why this is a staple in so many investors' portfolios. In addition to the high capital gains and the dividend payment, then is the expense ratio on this ETF also extremely low. They are at 0.03%. Overall, I'm a huge fan of this ETF as it tracks the overall performance of the market, and at the same time it has a very, very low expense. So the third ETF that I have for passive investing is the Vanguard High-Dividend Yield ETF, ticker symbol VYM. This is in my opinion a must for all passive investors and all dividend investors. It allows you to sit back, dollar cost average, and receive high dividend payments for the rest of your life. This fund is also very well diversified amongst very many different sectors. However, there is a large proportion of stocks within the financial sector, and that is because this sector is very well known for its high dividend payments and its history of increasing dividends every single year. So let's talk about the returns. Now this ETF has actually done really well, and one of the reasons for that is because it includes so many of the S&P 500 companies. It has provided a return of 26% over the last 5 years and 120% over the last 10 years. Even though the capital gains here is lower than the S&P 500 index, well then you're going to be getting a lot more in passive income through dividends, because this ETF is paying a lot more in dividends than the S&P 500 ETF is. Last year, this ETF had a dividend yield of 3%, which is almost twice as what the S&P 500 ETF had. The fund has an expense ratio of 0.6%, so the expenses here are really low as well. So are you a passive investor? Well then I would highly recommend you to look more into this ETF, as it provides great long-term value, safety in the markets, and really high dividend payments. So let's talk about the fourth ETF, and that is the Vanguard Total Stock Market ETF, ticker symbol VTI. This ETF is somewhat similar to the S&P 500 ETF, only this ETF does not only include the 500 largest companies in the US, it includes every single listed company in the US. The advantage of this ETF is the additional diversification. Now you're also getting exposure to the really small companies in the US that have the potential to make great capital gains. In total, this ETF holds 3,992 different stocks. So if that isn't enough diversification for you, then I don't really know what is. And in terms of the performance, well then has this ETF done really well and has provided a return of 43% over the last 5 years and 130% over the last 10 years. Not only has this ETF provided a great return, but it is also paying dividends. And last year, it had a dividend yield of 1.68%. So it is not the highest dividend ETF there is, but it is one of the ETFs with the highest capital gains. The fees are also extremely low at 0.03%. And that is exactly why you should look more into this ETF and maybe include it into your portfolio. So the fifth and the last passive income ETF that I would highly recommend is the Vanguard Growth ETF, ticker symbol VUG. Before I start talking about this one, then I should say that this ETF is the one with the highest risk, but also the one with the highest potential return. And that is because many of the companies included in this ETF can be overvalued at times, as it is heavily weighted towards tech companies like Apple, Tesla, Amazon, Nvidia, and so on. Overall, when the market is performing really well, well then will this ETF most likely outperform the S&P 500 index. But on the other hand, when the market is performing very bad, well then you will most likely see higher negative returns in this ETF than you will in the S&P 500 index. However, over the last 5 years, this ETF has provided a return of 59%, and over the last 10 years, a return of 225%. So this ETF has by far given the highest return, both over 5 and 10 years. However, it is also the one with the highest risk. This ETF is actually also paying dividends, and last year it had a dividend yield of 0.7%. It is of course not the highest paying dividend ETF there is. However, it does still provide investors with dividends. But the reason to invest in this ETF is definitely due to the high capital gains that you potentially can get. This fund has an expense ratio of 0.04%, so that is also really low. If you want to add more risk to your portfolio and you want the chance of getting higher returns, well then I would definitely recommend you to look more into this one. But keep in mind that there is high risk associated with it. So in the last part of the video, I want to talk about my personal favorite ETF. And my personal favorite ETF is the S&P 500 ETF, the VOO. And that is because it provides great diversification amongst the 500 largest companies in the US. It also has the lowest fees and a very stable and high return. If you already have this ETF within your portfolio, well then I would definitely recommend you to look at the other ETFs, as I really do think they have great long-term value. And with that being said, then thank you for watching today's video. Please like the video if you actually liked today's video, and subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.